Hi guys. Can you guys hear me? Okay. All right. God, guys. Okay, I'm gonna wait a couple of minutes for others to hop on and I will go ahead and get started on Futures Basics. So I'm laughing because you guys, I am such a jinx when it comes to longs. Like it's the funniest thing. Gonna. All right, thank you. Okay, I'll go ahead and get started. Oh my god, we are mooning you guys. What the fuck? Oh, I should just I set up some sim accounts so I can show you guys, when I execute or when features get executed, how it looks like, how it moves, things like that. But I mean, this is Asia, and we're just typically it's slow, but right now it's like we just popped like 80 points or something. Uh, it's insane. This is my order flow footprint. This is a rocket ship. Ah, insane. Okay, let's see. All right, guys, I'm going to answer any and all of your questions at the end. If you've been through this before, it's basically the same thing. It's beginner friendly if you've never traded prop firms, if you've never, if you don't know how it works. I will basically go over it all with you guys so that you can execute, trade it with your own money, prop for money, whatever. So I'll cover all of that. Also, if you guys want to follow along, you can go to propfirmtrend.com and just go to the trading resources, and this will be in there. Or if you want to go back through it, you can do that as well. Because if there's something that you want to check back out, and don't worry if this doesn't click right away. It takes time. All right. Trying to finish something, but it's not letting me. All right, let's see. Okay. Yeah, my team just made some money trading this in Asia, but at least they caught it. Alrighty. Okay. Let's get started. Okay, so I'll actually do some giveaways at the end. I'll do 2 giveaways to Traders Wealth Lounge premium for 30 days for free. So basically, what are futures? So futures trading is a contract between a buyer looking to invest in a seller where the contract is made for the future and has an expiration date. There are 2 types of participants, hedgers and speculators. So okay, just closing something out. So hedgers protect their assets from risks, and speculators are usually floor traders. So as retail traders, we are considered speculators. Okay, so futures contracts are available on different assets, on 5 different assets, and that's equity index futures, interest rate futures, commodity futures, currency futures, metal futures, and they have expiration dates. Okay, your broker, whether you're using, Interactive Broker, or if you're using Webull, or even like on TradingView, if you're charting there, but NinjaTrader and TraderWay will automatically prompt you to roll over, as you can see, like in the examples down here. So they'll prompt you to roll over, as you can, as some of these expire on the 3rd Friday of every 3rd month, which is the index futures. So S&P 500 and NASDAQ expire quarterly, and that's March, June, September, and December. But if you're trading like interest rate or commodity futures like oil, or metal futures like gold, those expire monthly. So basically the purpose of this is just to teach some of the fundamentals of how futures work, how you can trade them on your own account, how you can get a funded account, since I believe that many would benefit from adding futures to their skill set. So I'm going to talk a little bit about some of the key terminologies used in futures trading. I'm not going to go over the whole thing because it's kind of self-explanatory, but for example, unit of the instrument, lot, or contract. It just means, like, if I say I'm in one contract of NQ, or 5 contracts or lots, it's just the unit of the instrument. Tick is the smallest price movement that a futures contract can make. Point is $1 move or one handle. Globex is basically an electronic trading platform used for derivative futures and commodity contracts. However, traders also use the term Globex when they're trading overnight session of the market. So like right now, people are trading Asia markets, and if they'll say, I'm trading Globex. That's all that kind of means. Margin is the amount of money required to be deposited by a trader to open a futures position. So you guys can go through these. Like I said, fairly self-explanatory. We use mostly like the first couple. So first off, the market is essentially futures. We frequently discuss the S&P 500 or those. Although these futures are traded similarly to other derivatives, leverage is what they offer above all else. So futures trading is simply a very leveraged form of stock trading. So to contrast with futures, an E-mini S&P 500 offers roughly 32 to 1 leverage. And because ES or futures trade in ticks, ES trades in a 0.25 spread. So one contract changes value by $12.50 for every 0.25 it moves. So you gain or lose $50 when ES moves 1 point. And if ES changes by 10 points, you either win or lose $500. So instead of going with, so there's micros, so that's a mini. Then we've got micros, which is 1/10, so it's 1/10 of an ES contract. It's called an MES. So instead of the $50 per point, it's actually $5 for each point for MES. So it's simply 1/10 of the same stuff. Okay. So the most often used futures, as retail traders that we trade is usually like MES, which is the S&P 500. So it's like SPX or SPY, NQ, MNQ, the NDX, QQQ, RTY is IWM, CL for oil, GC for gold. Now, these trade in a manner more akin to shares than options. There's no theta, there's no IV, stop losses can be placed at precise price points, and each futures contract has its own specification, including the size of the contract, the tick size, which is that minimum price movement, and the delivery date. And like I said, the micro E-minis are 1/10 as small as the E-mini contracts of the same type. So let's say NQ, one NQ changes value by $5 per tick or $20 per point. However, the micro version of it is 50 cents per tick or $2 per point. And for ES and NQ, there are 4 ticks in each point, as the spread is 0.25. So every 25 cents that it moves, it is actually this amount. So it's the $12.50 or $5, or if you're doing the micros. However, if you're trading oil, 1CL changes value by $10 per tick or $10 per 1 cent. So every penny that it moves, each penny is a tick, and it's worth $10. So if oil is trading at $60 and it goes from $60 to $61, that $1 move is actually $1,000 per point. And CL has 100 ticks in 1 point. So as you can see, they're not always, they're not the same. Futures market is open 23 hours a day. You must close out your positions by 4:59 p.m. Eastern if you're trading, like funded prop firm accounts or intraday margin. It opens Sunday at 6 p.m. and closes Friday at 4:59 p.m. Typically, the best times to trade are during the New York Stock Exchange market open or during the European markets, which is in the middle of the night. And you also would want to check during the holiday, as the hours may vary. So like for Labor Day weekend, New York Stock Exchange was closed that Monday, but we opened that Sunday night, so the night before, at 6 p.m. and closed at 1 p.m. Monday. So we don't have the same hours. One thing I do want to kind of touch on is that many new traders that come, trading futures, they jump straight into the minis, which is the ES, NQ. So it's like the full size. And thinking, they're just trading futures when the risk is equivalent to trading the full index value. Okay. They don't realize that trading NQ is like trading NDX. Trading ES is like trading SPX. So most traders should be trading MNQ, which is the micros, or MES instead. So it's more like trading, if you're trading MNQ, it's like trading QQQ, which is, 1/10 of the full size. Same thing. MES is should be traded like SPY. So that's kind of all right. Okay, let's see. All right, so I'm gonna go over the different ways of getting funding, and I'm going to start with funding your own account with your own money. Okay. So you can trade micros, which is what I just talked about. It's that 1/10. It's more like if you're trading QQQ or SPY. So if you utilize a traditional broker like Interactive Broker or TOS, or if you whatever you're using, I suppose. You can trade micros, which roughly cost about $2,347 for an MES lot and about $23,000 for one ES lot. Okay. You want to also check with your broker how much capital you need for those, but or you can utilize a broker that specializes in futures, such as NinjaTrader or Tradeovate. I believe Webull has futures right now, and I think Robinhood does as well. AMT is another one. So instead of 23,448 for the traditional broker or for the initial balance, Tradeovate offers a $500 to $1,000 a day per day trading margin. Okay. And micro contracts are even more affordable because MES costs only $50 during the day trading margin. So let me kind of explain to you guys what that is. So right here where you see day margin and then initial margin. Okay, so Tradeovate offers reduced margin for both the day session as well as the overnight session. Okay, so reduced intraday margins means it's available from 6 p.m. to 4:45 p.m. Eastern. Okay, now this side where it says initial margin, where it's the ES is 23,000, NQ is 33,000 per contract. That is required if you are going to swing over the weekend. So, for example, it's Friday and you want to swing a position, then you would need this initial margin, which is the right side. And initial margin is also required from 4:45 p.m. Eastern until 5 p.m. Eastern. I'm sorry, 6 p.m. Eastern. So if you are wanting to hold for like an hour and 15 minutes, during the day, like after the market closes, you need the initial margin. However, if you are, like I am more of a scalper, I am not a swing trader, so, or, I'm a day trader, I can utilize the day margin. I can close my position at like 4:45 p.m. and reopen it back up at 6 p.m. So that is something that you're able to do when you're utilizing the day trading requirements. Also, account minimum, I think it's only about $250 for a Tradeovate account, which is one of the lowest in the industry. Okay, third way is to utilize trading prop firms. So you utilize a finance partner, also known, let's say Tradeify, Apex Trader Funding, Take Profit Trader, the Futures Desk, Top Step, My Funded Futures. There's so many out there. I think there's like 80 or 90 firms out there But it's I've kind of narrowed down about 20. I've vetted about 20, and then I've got like my top 8 that are 8 to 10 that are some of my favorites that I trade with. But how it works is you basically demonstrate to the prop firm that you are a successful trader. You must pay to enter the evaluation, which is a sim account. If you succeed, you will then be given a funded account to trade with. You pay the activation fee. And note, some firms don't have activation fees. Okay, it just depends on the accounts and the prop firms. Um, you keep all of the proceeds up to $25,000. This right here is from Apex. And then you keep 90% of the profit after the first $25,000 you earn, while they keep 10%. So you also want to see the prop firm rules, whatever prop firm you're utilizing. But some people get multiple accounts when on discount so they can trade them at the same time. There is a trade copier you can use, and each account must pass the performance evaluation as they are all standalone accounts. So, is this too good to be true? Not really. Most traders fail due to lack of discipline. And this is how these companies make money. And I don't care if you're trading futures with your own funds, with your grandma's funds, options, crypto, whatever it is, prop firms. If you do not practice risk management, you are going to blow your account. There's a reason why 95% of traders fail. It's not 95% of prop firm traders, it's 95% traders. So the way, is, to um, progress is to stay disciplined, consistent, but most importantly, it's risk management. I promise you. 90% of people, when they blow their accounts, is typically, whoops, I don't want this, is because they over leveraged, they oversized when they're trading, you know? So there, you guys, I'm sure you guys have seen, I think it's actually gone viral. One of the traders um, made 1.7 million, I think, in 3 days last week. That is not typical, guys. And, yes, people make thousands of dollars. Even if you make $200 a day, you can make that in minutes. Most people work a whole day for that amount. Don't have to compare yourself with somebody. Take the base hits, because that's what actually wins. If every single day you're making even $100, and then you progress a little bit to 200, 300. And in fact, like I said, a lot of these firms, you are able to have multiple accounts. So if you can trade copy, you make $100 in one account and copy it to 5 accounts, that's $500. It's not going to be hard. The issue becomes when and I think I've seen this with a lot of traders, is we become greedy when we start making money. And a lot of times it's money that people have not seen in their accounts before. So you start to get greedy, going over too confident, all of that kind of stuff. But one thing, that you got to understand is that worst that can happen is you lose your account evaluation fee. You do not pay back any capital. Okay. You can also take these evaluations as many times as you want. It's not just once and that's it. I also, if you're very new to it, I would not recommend anybody just getting, multiple accounts to try to pass multiple accounts. Pass one, get a payout, and just take it slow. That's all, you can do. And then when you do that, when you become consistent, and don't worry, most fail the first evaluation, unless you have a really good strategy already with like risk management. Then some pass it on their own. On the first one, actually, I had a guy just last week. He won an account from from me, and he passed it in 3 days. So, and he came from options, and it was his first time playing with futures. So this right here is from Take Profit Trader, but basically why prop firms versus trading your own money. Um, so simply put, most traders are undercapitalized. You level the playing field by using their accounts, not your own funds. Okay. Trading your own funds can lead to severe losses. However, with a prop firm, your losses are limited to the associated challenge fees. Also, lack of discipline haunts traders. Can you guys hear me? And the risk management system and rules will make sure you stay disciplined during your trades. Okay. Also, all technology and account setup, the market data, all of that is, set up through them. So I'm going to talk about this quickly, but first, actually, let me go to Tradeify quickly because just because they have different accounts. So up here, we've got, to choose your account type. There's Lightning Funding, there's Growth, and there's Advanced. And the reason I'm pulling this up is because what I'm going to talk about is important to understand what type of prop firm or what type of an account, because we're all different types of traders. Tradeify offers something called Lightning Funded, which means like this right here, there's no evaluation. So you basically are funded. Whatever you make in this account, as long as you don't go over your drawdown of $6,000, and then you're gonna, the money that you make in there, as long as you stay in the consistency, you get to pull out. Okay. Their growth account is the trailing is end of day. So basically, let's say on a 50K account, your profit target is 3,000. Your trailing drawdown is 2,000, and it's end of day. Okay, so in order to pass this, and they have a 1-day pass. Okay, profit target is 3K. That's it. If you make $3,000, you basically get, a sim funded account. And then they've got the advanced, which is it's a 50K account. Oh, also, sorry. On this 50K account, or on the growth accounts, there's no activation fee. So you can see down here, once you pass, there's no more fees. But here, if you do like a this one is an intraday drawdown, and it has an activation fee. So it's, when you're taking the evaluation, let's say it's just $48 a month. Again, this is, there's different types of accounts and price wise, whatever it is. But it's important to know the difference between intraday, intraday, end of day, and then the futures desk. And there's a thing called static account, and the futures desk has one of the best. So, and it's customizable. All right. So I'm going to talk to you guys about what the difference is. This is, I'll show you guys this later. I set this up so I can execute some trades for you guys, just to see how it works. If I can now find my, right here. Okay, so what are drawdowns? Okay, so there are 3 types of drawdowns. And drawdown is the maximum amount or maximum loss you're allowed to have before your account gets breached and liquidated. Okay, so understanding these is important, as well as picking the accounts. It's not all about the price of an account. So let's just start with an intraday trade. intraday trailing. Typically, these are more for people that are scalpers or take base hits. So how it works is your drawdown limit moves up with your balance and unrealized gains throughout the day, but resets to the daily starting balance each day. So for example, a 50K account with a 3K drawdown. Okay, so this is just an example. Let's say at 10 a.m. you make $500 in profit. So now your balance is $50,500. Your drawdown is $47,000. Okay. At 11 a.m. you make another $300. Now you're at $50,800. Your drawdown moves to $47,800. So at 1 p.m. you open a position. You're up, $600. It's unrealized gain. So your account now is at $51,400 unrealized. The drawdown now moves to $48,400 because it trails unrealized gains. Okay. At 2 p.m., let's say you close your position for $400 realized. Now you're at $51,200. Your drawdown is going to stay at that $48,400. It doesn't go down. Let's say at 3 p.m. you lose $400. So now your balance is $50,800. And again, your drawdown is going to stay at the $48,400. It doesn't go down. And remaining drawdown is $2,400. So the next day, your balance is $50,800. However, your drawdown is going to be $48,400, which is now $2,400. So now you've got $2,400 left in your available drawdown. End of day trailing is more for those that hold like longer or throughout the day, or you can, so the drawdown limit only moves up based on your ending balance at the close of each day. So for example, 50K account with 6%, so 3K drawdown, okay? Day one starts with 50,000, drawdown is 47,000. Total drawdown available is 3,000. So let's say during the day you are up 51,500, then down to 50,800. Your drawdown is going to stay at the $47,000 all day. Okay, so your total drawdown is 3,000, stays fixed all day. You close day one, you close your account, your balance 50,800. Again, drawdown is going to now update to 47,800 because it's at the end of the day. Okay, so the day two, next day, you start with 50,800. Drawdown is 47,800. $3,000 from the new starting balance. Okay, you still have that $3,000 drawdown available left. Now, the static drawdown is one of my favorite. Not many firms offer it. The one, the Futures Desk, they offer it. It's more of a premium prop firm. But basically, like I have a $6,000 static drawdown when I started with them. And other firms, some of them have like $1,000 or maybe $2,000. I'm not 100% sure. Again, it just depends which firm you're looking at. But how that works is it mimics your personal account the most. Your drawdown limit is fixed based on your starting account balance, and it never changes. So if you have a 50K account with 6%, 3K drawdown, your account starts at 50,000. Okay, so your drawdown is 47,000. Let's say week one, you grow to 55,000. Your drawdown is going to stay at 47,000. It's not going to move. Month one, you grow to 60,000. Your drawdown stays at 47,000. Okay, month six, your account is at 75,000. Your drawdown is still 47,000. It never changes. Okay. So it grows as your balance grows. Okay. However, reality check, if you lose $28,000, then you can still breach the account. So that's the difference. I feel like a lot of traders don't take the time to understand the different types of accounts. Like I said, if you're more of a person that's going to hold 5-6 hours, then probably end of day or a static drawdown. if you take base hits and you don't wait, let's say your profit went up to $1,000. I see this all the time. Traders will sit there. It went up to $1,000, and they'll sit there, and it comes right back, down to, and they'll either have a loss, or even if it's break even, then that if you hold until your position gets back to the intraday trailing is not going to be for you. So it's important to kind of distinguish the different types of drawdowns, because like I said, we're all different types of traders. Okay. Some firms have consistency, and I'll kind of talk about that in just a bit. Here, if you guys go, you can look at the evaluation rules, payout rules, quick comparison table. If you click there, these are some of my favorite firms up here, but you can kind of click through. Also, I am not affiliated with all of these firms, guys. So there are many firms out there. There are many that also closed. So here's a comprehensive list. Okay. As of October, yep, we had 66 active firms, and back in 2024, 8,200 closed, but I think this right here is including the Forex ones. So, so this number here is only taking, I believe, the 18 confirmed closures with the active firms left. But like I said, there's so many different firms. You have to be careful. They, like I said, I don't. If I didn't verify them, if I didn't vet them, I'm not gonna affiliate myself with them. But just so you guys know, there are those firms you can look into. So let's say you're looking at, I don't know, a static account, okay? So click on a static account. It's going to pull up all of the firms that have the static account. And then you can also go down here and just kind of, what's the minimum days to evaluation, or minimum payouts, or what the payout split is. If you are interested in more, in depth of a firm, then this here is basically, it's the full details, but it's more of a condensed version of the firm and what their accounts are like. Their trading rules, restrictions, things like that. Obviously, their website is going to have a lot more, but this is just more of a condensed version. Okay, so what I wanted to show you guys was, where's the calculator? Okay, so I talked about consistency calculator. So for example, if you are trading TopStep, okay, TopStep has what you, and so do other firms, but I'm just going to use TopStep as an example. It has a 50% consistency in the evaluation, okay? So some firms have it during the evaluation, some have it once you pass, okay? So what that means is that your best trading day represents a percentage of your total profit. So let's say you had that 50K account, the profit target was 3,000, and you made $1,700 in one day. And let's say your profit, you would be over that 50% consistency. So what that means is, you can make $1,500, you're going to be 50% or below, or if you make, let's say, $500, you're going to be at so basically, just you can calculate the consistency here. But some firms, like I said, they have it during evaluation, some have it after. So you just have to kind of look through there. And you can also go in here, which is in the calculator, and select multiple firms. So let's say, I don't know, Top Step, $3,000 profit target, $2,000 end of day trailing. Confirm with let's see, Tradeify. They actually have a 40% right now. So same thing, profit target $3,000, drawdown is $2,000. Okay. Final price is $83. But if you can see, if you're comparing it to Top Step is $198 for the same type of an account. You can also add same, if you want to do same firms with different accounts sizes, just to see, you can do that as well, but it will like do a discount for you. So I'm just kind of showing you guys that. Okay. Enough about that. Let's go back to, I'll talk about some of the psychology and sizing risk management, but let me show you guys the platforms that are used. All right, so this right here is called Project X platform. Or, there's like TFDX. So a lot of firms will use, so for example, Top Step, it's going to be called like Top Step X. Other firms will have their own as well. So basically, this is what it looks like. It looks more like TradingView. Hang on a second. Okay. So it looks like TradingView. And up here, you would enter NQ or MNQ, whatever you're trading. And basically, if we're going long, you would either buy market or join bid. If we're going short, you would sell market, join ask. That's it. Flatten all to close your position. Up here is where you enter the amount of contracts. There's nothing else. That's pretty much it. Either you're going long or you're going short. It's fairly simple. I would not chart on this. I would still continue to chart whatever you're charting on right now. This is NinjaTrader prop platform. I personally use this. I've used it for over 3 years because I use this thing called Order Flow Footprint, and it basically gives me more in depth inside of each candle, what's happening. So like here we had a sweep that came through. But I would say 95% of traders, if not more, don't use order flow footprint. Okay. So this is, you can add order flow footprint on like Sierra chart, NinjaTrader, but you can't add it to Project X. It's a third-party indicator. Tradeovate prop platform, same thing, similar. If you're going long, if we're buying, like it would be like, and you guys have to remember that there are different, hang on a second, what did I just get? All right, sorry. Different learning phases, okay? So some don't understand what long means or short. So for example, if you're to buy calls, then we would, buy market where the market is going up, the ticker is going up. Or if you're buying puts, so you would sell. So that's when we're going short. So just to kind of, so while, the key takeaway, while a lot of like there's no theta, there's no IV, so there's no premium decay. If you're in the right direction, you're going to make money. Unlike when you're trading options, you can be in the right direction, but your options are burned out because, theta, IV, whatever. So while this, like I said, this may be considered easier than options, but it's in respect due to no Greeks. However, most people struggle with risk management, FOMO mindset, and that's where, the accounts get lost. Okay. So let's go to risk management. So this right here is called the Trading Psychology Lab. Might look a little funny, but, and I know everyone says, when you're trading, don't have any emotions, no emotions. Yeah, okay. Well, guess what? We are all human. We are going to have emotions. No matter what anybody tells you, that's just how we are, right? So whether you're frustrated or fearful or greedy or impatient, maybe you're confident, calm, whatever. But if you go through this and you are honest, you do an honest self-assessment, and you can do your bias check. Sometimes people will have a gambler's fallacy, like thinking past results affect future odds, right? Or the herd mentality, following whatever the crowd is saying without analysis. So you click through that. It's going to give you a little dashboard later, kind of your emotional state, cognitive bias, and over time you're going to see which emotions that rise up. We're all different, so and those emotions, if you start to see you are like losing, whether it's you go on a tilt, you're losing, whatever it is, it's going to tell you you're at a high risk or elevated risk. Proceed with caution, things like that. But right here, this is probably the most important thing. I keep talking about the risk management, and this is a risk management calculator. And basically, it will give you the micros and the minis, so both the full size and the smaller size. So let's say I'm just going to use MNQ, okay? And here it'll tell you what the tick size is and then the value of the tick, okay? So let's just say you have an account, $2,000, okay? So you've got, let's say the drawdown is $2,000, and typically what you should be risking is anywhere between 2 to 3% per position. 5% is aggressive, but it's used for high conviction setups and strong edge. Okay, so let's just say we want to risk 2%. I'm just going to input 26,000, and let's say you have a 10-point stop loss. Basically tells you to use 2 contracts of MNQ, okay, which is the micros. You're risking $40 per position. If you do 5%, it's going to bump you up to 5 contracts, or $100 per position. If you're sized in right, you're not going to be, you're not going to be blowing your account. But what I see with most people is they get a prop firm account. Not only do they, so 15% is the destruction zone. 15% is risk. Risk is gambling. It's not trading. 5 losing trades, you've lost more than 50% of your account. 7 losing trades, your account is likely destroyed. Okay, this is how 90% of traders blow up. So when you see people talk about, prop firms, they don't work, or this and that, or I always say 95% of traders or 90% of traders fail. It's not prop firm, it's not options, it's not equities. It's just in general because of this reason. Okay. If you are trading your own account with $2,000, you're going to blow up doing the same thing. But like I said, what I see, this is what I see. People using NQ. Okay. Now, on a $2,000 account, it says you should only do 1 contract of NQ, if even that. That's 15% or higher, right? What I see people do is using 2 or 3 NQs. And each dollar is $20. Okay. So 20, hold on a second. So they're risking 700, 800, 600, whatever it is, if they're going in with 3 or 4 NQs per one position. And actually a lot of times they're risking more than that. So they're basically risking half of their account for one trade. We all know how that's going to end. So when you start trading, if you start trading futures, I do know about 90% of traders that move from options over to futures. They don't go back to options. I know like 4 or 5 people that have gone back to options. The rest are doing both. They're doing options and futures. So that's kind of a little thing there. Here you get, also guys, everything on here is free. There's no credit card required or anything like that. Everything is like I made all of this when I got started trading futures 3 years ago. I came from options, so I was trading, well, first I was trading crypto, and then I was trading small caps. Then I moved over to options, then from options over to futures, and I never went back to options. And one of the reasons is obviously, like I said, theta and IV. I had so many positions that would expire worthless. And I think when you're playing with options, I was down 220 grand of my own money. So, at that point, it was like, hey, I'm either going to try these prop firms and see how it works, or, hold on a second. Okay. But it's, you can journal your stuff in here, and it's fairly important, especially when you're getting started, to journal. You can import from your broker, CSV import. But one thing here that it has is understanding the risk to reward ratio. So, if you, let's say you're risking $500 to make $1,000 per day, that's a good ratio. With that ratio, you only need 33% win rate to break even. However, anything above is profit. But if you're risking $2,000 or $1,000 per day to make $200, that's not good. That's a bad ratio example. That's not, you would need like a 75% or 100% hit rate to sorry, my son is texting me asking when I'm going to be done. So this is why profit targets must exceed risk. Okay. And then in here, you can kind of put your starting balance and, your daily risk or loss limit. And you can see over the number of days, like how much your account is expected to grow. So even with base hits, you will see a nice, as long as you have the good ratio of the risk to reward, you're going to see it grow. But yeah, when I started trading futures, there was barely anyone that was trading futures at the time that I knew of. And right now, every influencer is doing it, or big accounts. But I had to learn everything with trial and error. So it cost me a lot of money, and I made it. My vision or my mission to teach others about futures, because when I initially inquired about futures, I was told by retail traders, futures is not for us. It's for institutional traders. It's for the big boys. And it kind of like intrigued me. So I did more research and found out it's not. It's actually pretty easy. So, all right. So this right here, you guys, in the trading resources, when you start trading futures, actually anything that you're trading, you should always check the economic calendar, whether it's, trading economics calendar, Forex Factory, investing.com, whatever's out there, just make sure you check the calendar and see what's going on. Some firms will not let you trade big news events like a minute or two before or a minute or two after. Others will, so you have to read on that. So the news that I'm talking about is like CPI or FOMC. So that whatever it's like if there's a red folder in Forex Factory for USA, that's kind of what they don't want you to trade. Some, like I said, it's kind of a split 50-50 where some allow it and some don't. Some allow it during like evaluation, others don't, but they'll allow it during funded. It's kind of like all over the place. Another thing is, look at the news feeds bar chart, Benzinga, Financial Juice, just to kind of be on top of what's going on, with the volatility, all of that. Let's see. Another thing is, oh yeah, here you guys can actually get a premium free journal. It's called Insight Trades. There's like live sessions, post market review, all sorts of kind of cool stuff. Let's see what else. Sorry guys, it's like late. I've been on my computer all day. Oh yeah, there's giveaways that I do, guys. Make sure you guys. It's amazing to me how many people don't participate in them and how many are getting, a free account. It doesn't cost you anything. It's a free freaking account. Like, take advantage of it. So, all right. Well, let's actually go to here. Okay, so this is NQ. I'll add this one for MNQ. Also, I can't stress enough how important it is for you guys to have a hard stop loss. Figure out what it should be for you. We're all different, but this one right here is a 70 tick. It could be mine's usually 40 ticks, which is really tight. But my take profit is also starts at 40 ticks. But let's just say, so notice here, if you guys can see it where it says 25,690.50. So it moves in a quarter, so in 0.25, 0.50, 0.75. So that's a tick, okay? And then each dollar that it moves is $20. This one here, each dollar that it moves, it's $2. So let's say we're gonna go long, okay? This one I'm gonna change to ES. Okay, so notice so 1 point, so 1 point is going to be $20. However, on this side, it's different. So this is the micro, okay? That's what I, keep saying that you guys should start with the micro. It's pretty much the same. Thing is just 1/10 of the size, okay? Of course, this one's going to go up faster. You're going to make more money with this one, but you can also, in here, you can add, like I talked about where we had like 2 contracts, or 5 or whatever it is, depending on the account size. But this NQ especially is very volatile. Even though it's $20 per point, it definitely moves. You can be auto liquidated pretty fast, especially if you don't have a stop loss and if you oversize. Okay, so I'm going to close that. Here is ES, and then I'm going to do the micro version, which is the MES. So this one changes. This is S&P 500. So think of like the ES is like SPX and MES is SPY, okay? Same number, same thing, but just different risk. So let's say we want to go long here. Oops, yep, all right, fine. So this moves $50 per point. parentheses. This one was $5. So it's $1.25 per tick, and there's 4 ticks in 1 point on ES, so it's $5. So $12.50, $1.25. You guys can see that. So that's basically it. I mean, each quarter that it moves, it just depends, if you're trading ES or MES. I would say that ES and MES is a lot less volatile compared to NQ, but when I started out, I traded ES, and then I switched over to NQ, and then I haven't gone back to ES just because the way I trade. So that's basically it. Oh, sorry guys, I'm really like just at time of the night. All right, let's see. Where is Restream? Alrighty. I'll go. Yes, this is being recorded. Yes, the Futures Desk is probably the most top-notch prop firm out there. You are basically like they're hands-on with their traders, and they're one of the fastest to move you into a live account. So yeah, it's I bring them on actually. Like I had Josh on, which is the CEO, about 2 weeks ago, I think. Thanks. I'll bring him on again. But yeah, he'll answer any and all questions for you guys. I think I have a giveaway. It's like $200 credit for them. Yes, this is recorded. It's going to be on Twitter. Thanks, Lenny. Hi, Fenster. Okay, so I'll do 2 giveaways for Traders Wealth Lounge, 1 month free. And I will ask, it'll be a trivia, so whoever can answer it for me, whoever's the first one to answer will get it. It's not going to be that hard. Okay, how many types of drawdowns do we have? If you paid attention. Yes, Frazzy. Good job. Okay, DM me. Bro, you're on both. DM me, and I'll send you the link. Yes, Edward. I'm gonna do so. Frazzy already answered. I'll do one more. What asset expires quarterly? Helping the algorithm. Thank you. I know. I keep getting asked by a lot of people to teach this. Which is the order flow footprint. I might start doing some of that. Anybody? Which asset expires quarterly? Okay. Which asset expires monthly? How about that? There you go. Yes, you're right. Stock index futures quarterly, and then the rest, like oil, gold, those expire monthly. So, all right, if you two can please DM me, I'll send you guys the link. And let me know in the chat, like the video thing, what you guys want me to touch on the most. I can do that next time. I can go into like like more detail into a specific area. Oh, actually, I do want to tell you guys. So like for trading futures, whatever you're charting with right now, so like you're charting with Fibonacci, with moving averages, with supply and demand, it doesn't matter. In whatever you're using right now for QQQ or SPY, that's exactly what you would use for futures. So it's not like a different type of uh, chart, like that you're charting something differently. Some people will actually chart on QQQ and SPY and take the trades on, NQ or ES or MNQ, MES. So that's something that you don't have to change your way of trading or charting. So, all right, guys, have a good night. Thanks all for hopping on.